Hello and welcome back to Coinscrum's Meet the Founders. We're joined today by Scott Trowbridge of Blockswap. Welcome, Scott. Great to have you. How are you doing?
Great to be here. Thank you for having me.
Thanks. So to kick off today, I wanted to get, as we usually do, get a bit more context from you guys at Blockswap, and in particular, you directly. Could you tell us a little bit more about your background and what your previous life was before entering the world of blockchains and crypto?
Yeah, absolutely. Yeah, it's certainly not as interesting as until I came into crypto. But yeah, so I started off actually in telecoms. So I actually was director of marketing for a mobile virtual network operator, which was based in Spain. So led a team there. That was around like when the iPhone 4 was all the rage and first being launched. And then after that, I wanted to come back to London because saw that everything was what was happening with the silicon roundabout, everything that's happening around like Shoreditch. Was really excited towards like seeing this like movement of trying to like replicate everything that's happening in like Silicon Valley in US and trying to take across with that into London. And I mean, it's worked out, right? So like the startup growth that we've seen in London as a city specifically is tremendous. So I did a startup which was focused on consumer engagement. It was a platform that used iBeacon technology to essentially engage users to provide some form of social interaction with merchants. And then after that, I actually had a lot of like interest from new startups that wanted support on how to grow like efficiently. So I spun up a digital consultancy. This was called Digital London. Essentially worked with pretty amazing clients like Google Glass, Radboud University in the Netherlands, worked on like some health medical device apps and things like this, and some early stage startups as well, focused on three main areas: conceptualization. So how do you articulate your product? How do you articulate your value proposition? Funding. So through my own, I guess, growth, like working on my own startup, I was built quite a good network with like different VCs and angel investors. So was able to help startups on the funding side, get access to investors. And then the other side was also growth. So product market fit strategy, customer acquisition, etc., helping on that side. And then, yeah, after that, that's really where I started coming into blockchain.
Nice. No, it sounds very diverse and looks like you bring plenty of experience to the blockchain space for sure. So then when you did dive into blockchain, the blockchain crypto world, how did you get around to Blockswap? Because my understanding was, I think you were there before DeFi was all the rage, and I know DeFi then sort of erupted, but how did you get to the Blockswap idea?
Yeah, so that was quite a long journey. So I actually started learning about blockchain and cryptocurrencies in 2014. So a mentor of mine at the time, who is actually now has the title of Sheriff of the City of London. So he was known probably like 10 years before Bitcoin was formed, of utilizing distributed ledger technology. And he essentially told me about Ethereum and like Vitalik and told me to read about it. So started learning pretty early on around then. And after that, my first full-time role within crypto was I was director of global business development for a protocol based in Beijing called WanChain. So I led our EMEA team. We had an office in London and on the business development and partnership side. It was great fun, have a really cool team. A lot of them as my team members now have spun out to Chainlink, Polkadot, Akala, and many other projects. So it's really cool to see. And then after that, I actually ran the WeWork FinTech and Blockchain Labs, which was essentially a incubator for early stage startups that was just focused on supporting FinTech and blockchain companies. Some of the companies involved you'll be familiar with, so like Swissborg, Chainlink, a bunch of others.
No, I can imagine there'd be quite a few there. And then how did that sort of evolve into DeFi? So how did you make the jump into what is now Blockswap?
Yeah, sure. So I think like certainly when I was doing the WeWork labs, you had like traditional fintech companies, and you had like pure native crypto projects. So there was like this breed between the two, and you sort of like look at everything that's happening with like, I guess, seeing that the problems that the fintech companies were solving in traditional finance, like I found it very interesting. So like open banking as a movement, it originally started in the UK, but like the similar structure is now later adapted like across the pond and like in other places. And what they were inevitably trying to do is essentially make it easier for like smaller startups and smaller companies to have access to customer banking data. And like we've seen the form of like challenger banks like Revolut, Monzo, etc., all form there. And with open banking, it was really trying to like synchronize data sets through one API standard, and sort of a step of banks being more open, not quite like open source like we have in blockchain, but essentially trying to make that step. And the next wave of that would be looking at like open finance, which is trying to integrate these other financial primitives and offerings like mortgages and insurance, etc. So I started like really looking at staking and proof of stake architecture and different consensus models within proof of stake chains, and like became pretty fascinated with what's happening there and the growth of these different proof of stake chains. Essentially, like a lot of what Ethereum is trying to do now is like scale moving over to proof of stake. And that made me think of right now, everything in DeFi, it's like trying to simulate a lot of the traditional financial layers. And if you look at like most of the economies in the world are built on credit in most cases. And DeFi, we are really like these pseudo anonymous accounts, like individuals. We don't have a credit score, and everything in DeFi, like the loans, borrowing, lending, etc., everything is over collateralized. For example, like Maker, you put 150% down as collateral to get essentially your underlining loan back. So if you look at like staking and proof of stake, this is a mechanism which can verifiably prove that a user has assets locked on chain. And that's like very interesting from a conceptual perspective, where you now have a mechanism where you don't need to really have to know the identity of an individual, but you do have an understanding of their transactional history and that they do have assets that are locked in a contract at a given time, and it's backed up by a secure proof of stake chain that's has a lot of liquidity behind it. Yeah. So in answer to your question, like there was a lot of like thinking that went into this. I actually met my co-founder whilst we were hosting a meetup event within WeWork, and we just got talking about these types of issues, like also like universal basic income, which you'll probably understand later, like with our Open Saver account, a lot of that comes into there. And yeah, all of that kind of conformed together, and we started Blockswap.
No, that's really, really impressive and really interesting to see your thought process that got you there. So thanks for all this introduction about you. So you mentioned your co-founder as well, and could you maybe give us a bit more detail on the size of your team and how you guys are building your protocol?
Yeah, so we're a team of 5. We are actually hiring quite a few technical positions at the moment. My co-founder, he's really smart guy, like proof of stake architect, specialized in proof of stake architecture. He headed a multi-chain asset tracking network called DScan in San Francisco, and has done like he's been in the DeFi space like since it's Genesis per se. And then we have 4 other developers across the globe. So yeah, team is really strong. We're really excited for it.
That's great. Okay, so in terms of your product or products, maybe multiple. So when you said that your product was very much influenced by what you'd seen in traditional finance and trying to bring that to crypto because of the I guess the trade-off of when you start to want, freedom and you want privacy, and then you get pseudonymous accounts. So it's quite hard to kind of replicate traditional financial products, which require a lot of personal information. And so to understand what your idea for Blockswap was in 2020, has it evolved to anything differently as to what we're seeing today, with the DeFi space really going off on a tear, but we're still not seeing, I don't think, collateralization levels coming to something more acceptable where lending is accessible to retail?
Yeah, it's a good question. I think if you our core focus is on the proof of stake chains and like proof of stake landscape. And if you look at that, like all of the proof of stake chains have continued, or all of the top proof of stake chains have continued to mature, and they continue to add more liquidity over time. As you said, like just take ETH alone, where primarily this DeFi movement has really been. ETH has seen there's like $300 billion worth of assets. I have to check what the price is like right now, but around $300 billion worth of assets, even on the price today, that will be transitioning over to proof of stake. We hope within like the next 48 months, hoping less. And there's like already $12 billion worth of assets that are locked in ETH2 staking contract. And then you look at like the other side, what's happening in DeFi. So all of the DeFi just on Ethereum, like we've seen a growth of like 60x in just the past 12 months, and a flux of these different protocol tokens and vegetable tokens offering like super high rate yields. But like no one until now has really been able to offer anything that's fixed rate, long-term and sustainable as a savings product. And that's really like where the premise of Blockswap has risen from. Like you trying to utilize proof of stake and staking as an underlying mechanism to trustlessly redistribute wealth. And so I think like the growth has definitely allowed us to accelerate our user adoption, especially through like our community net that's about to kick off in the next couple of weeks. So we've like been able to grow and scale a lot quicker and just bring on more users because they already have like this underlying understanding of how to navigate like DeFi and interact with DeFi protocols already. So most of the heavy lifting has already been done. So from that perspective, yeah, it's been tremendous.
So I had a bit of a scroll through your website. You obviously have the Blockswap Network as your underlying layer, but you also have an extensive suite of products. I think you mentioned that you have an AMM. So for fixed income protocol, you have your community net and community net token. You have a slot token and universal savings account as well separately. So could you maybe explain how these sort of interact together, and I guess how your stack is sort of built on top of the Blockswap network?
Yeah, great question. So there is a lot underneath the surface from a technical perspective. So I'll really try and conceptualize it in a simple explanation. So firstly, what is Blockswap? So Blockswap is an immutable, decentralized, non-custodial protocol that's bringing fixed income products to proof of stake chains. We have two main components in the Blockswap network thus far. The first one is a stakehouse, and the other is OpenSaver, which I'll get into. So a stakehouse is an automated asset market maker, so AAM. And then this actually is a simple shared registry that allows a ETH2 node operator to register their node and associated validators on chain in order to permit liquidity abstraction. So the details of how a user would interact with this is that for stakers, we basically simplified the staking process for Ethereum and isolated the slashing risk, where we enable stakers to bring 32 ETH like they natively would in Ethereum ETH2 to become a validator. And what they do is they bring 32 ETH and join a specific on-chain staking node called a stakehouse. In return for that 32 ETH, a user receives 24 DETH, and which is the DETH is 100% non-slashable, one-for-one representation of their underlying state ETH, essentially you can see it as liquid ETH. So if you're familiar with like liquid staking protocols, it's quite synonymous with that. And then the other token that they receive is 8 slot token, which is essentially acting as a perpetual bond. And this represents the equity of that stakehouse. So you can see D token like providing a fixed yield token where anyone can access ETH2 staking without having to actually run a validator themselves. And all of this is through like an immutable, permissionless, non-custodial protocol. So you're not giving your assets to anyone. You're holding your assets and just interacting with a smart contract. So it's quite different to how other staking service providers work. But what this coordination layer enables is essentially we can bring in billions of dollars and large amounts of liquidity seamlessly and securely coordinated through a value network, which is backed by the security of the Ethereum proof of stake chain. So that's the first aspect, which is Stakehouse. And then the first protocol that we're actually first income product that we're building on the Blockswap network is called OpenSaver. And so this is a new type of architecture that's really built from the ground up, which is providing a sustainable savings market to mainstream users. So what happens is every asset in OpenSaver ecosystem has a fixed rate of yield. For example, in this case, you have a Saver dollar, which is giving a 7% interest rate, which is backed by a bonded proof of stake asset as its collateral, backing that deposit. So how it essentially works is every time a Saver is purchased, a Saver bond is minted, and the collateral of that Saver bond is keeping 100% staked asset collateral as its reserve. So for example, if the price of the base asset decreases, it creates like this arbitrage opportunity to go long on the proof of stake asset. And the market can buy up these Saver bonds. And essentially buying up these Saver bonds gives the managed right to that Saver bond, and they can flip that in the market. So OpenSaver smart contract then will make sure that the asset will maintain 150% collateralized debt ratio. And yeah, you can see like OpenSaver, as you mentioned, this is actually built on like an automated market maker model where you have users adding liquidity to a loader pool. So they add the D token to slot, like I mentioned, that gets minted out of the stakehouse. And then you have another liquidity provider that's bringing a USD stablecoin. And this is adding liquidity to a loader pool. Now, what happens is the liquidity provider that's adding liquidity to the loader pool, so the D token is slot, they are getting a 10% APY reward on their staked ETH. So let's think about ETH2 rewards are roughly around 8% right now. I think it's around that range. So essentially, someone adding liquidity into the OpenSaver protocol will be getting 18% on ETH. So it's quite a considerable amount. And then for someone that's adding liquidity, adding slot liquidity into the OpenSaver, they are essentially provided a mechanism to offload their slot value in the form of a USD stablecoin. So I went into the details, so I'll try and pull back a bit. But basically what you have is a system which enables an end customer to have a universal basic savings account. They simply bring their native currency, they buy up a Saver dollar, and this Saver dollar is giving them a 7% interest. And then that's really all they need to understand. They don't need to understand the technicalities of staking, consensus. All they really need to know is this application is giving me 7%. I put in $100. At the end of the year, I get $107 back. Now, for the DeFi type of user, they're focused on getting an additional yield on their proof of stake asset. And that's basically how it works.
Yeah. And so, sorry, just for a layman like me, so who is essentially going to be borrowing the money from your protocol? If there's a yield, who's going to be using the money to essentially fund your yield? Unless I've missed something in your explanation that was explaining that.
So there's no borrowing per se. So this is all around sustainable savings markets. So a user is putting in money into a system and they're getting a reward based on that. So for an end customer, like let's take banks right now. Banks are paying, let's be generous, say 0.5%. It's not as high as that, but let's say it is. Now that's pretty low, right? So the crux with this is you have a user, an end customer that not need to understand anything to do with DeFi, anything to do with proof of stake, anything to do with really crypto in most cases. All they really need to know is that they are utilizing an application that is giving them a savings account that's giving them a 7% APY. And this is not dependent on the fluctuations of like these other like protocol tokens, for example. So as I mentioned before, we have a system which nearly like, I don't want to say guarantees, but sufficiently ensures that the end user will always get 7%. If the price of ETH tanks, like we saw recently, or the other proof of stake assets that we support, the end user is still going to be receiving that 7%. And that's quite interesting from like many dynamics. So for us, we do have access, being in London and the UK and like Europe. We have access to banking. We have access to financial services. And I think what's interesting around this is permissionless, this is non-custodial, and this is essentially accessible to anyone just with a mobile device and an internet connection. So this gives someone in a emerging economy access to this financial service which they don't already have. So there's several different like interesting layers behind it.
Oh, really interesting. So, I mean, you led me really well into my next question, which would be, who would your sort of ideal customer be, and how many sides to the Blockswap network market are there essentially? Because I imagine there's, you mentioned the DeFi actors, you mentioned the sort of traditional finance actors that just want the universal savers account. Could you elaborate a bit more on who your primary customer base will be?
Yeah, I think like right now, our core focus is launching like the Stakehouse and OpenSaver as the first fixed income product. And for OpenSaver, like the two types of users that we really are focused on serving is one, a user who wants to stake their base native token and earn like a higher inflation reward, like I mentioned around the 10% additional reward on ETH. And then the other user who wants to just bring their native fiat and earn a sustainable APY savings without having to touch proof of stake themselves. So like, I think in the crux of it, like we're really trying to provide like a non-speculative savings market, which is based on proof of stake's native yield source. At the same time, focusing on providing like the user onboarding in a very like efficient and cost in a very easy and cost efficient manner. So like going back to your DeFi question, you can really see like proof of stake and staking is quite like synonymous with other fixed income products, like a government bond, where Ethereum and other proof of stake chains are paying stakers like a steady inflation reward. And that's like really the narrative that we're trying to build. So how do you essentially utilize DeFi to build these sustainable savings products?
Okay, no, that makes sense for sure. So then maybe more back to the technical aspects a little bit. Your protocol is primarily an Ethereum one, or based on Ethereum, and I think the tokens you were talking about launching are going to be ERC20. But I saw that you recently came out the Algorand EU accelerator, and you also have a partnership with Polygon and Matic. Can you maybe explain, especially since your focus has been broadly on POS chains, not specifically Ethereum? Are you going to try to stay agnostic to all chains? What's Blockswap's sort of strategy in terms of being a second layer on top of a POS chain?
Yeah, so for OpenSaver, like it definitely requires like a large amount of liquidity to make sure like the system runs efficiently. So we've been very like I guess like strategic and like focused on our decision making of what proof of stake chains to support. So the obvious one is Ethereum. Like they have a large amount of liquidity, a large market cap, and they have they have a huge user base. Like let's be real. And then the other proof of stake assets that we are supporting as the collateral source within the OpenSaver protocol, we have Algorand, as you mentioned, like we went through the Algorand EU accelerator, and we will be launching AlgoSaver in the next beta version of AlgoSaver within the next 2 months. And then the next change that we're focused on and the underlying assets that we'll be bringing into the OpenSaver are Cardano, so ADA, and then Polkadot DOT. And yeah, in our structure in all cases is really to work like directly with the foundations of these proof of stake chains. So yeah, as I think you'll hear some more like exciting news coming out around how we're facilitating that in the coming months as well.
Okay, perfect. I'll watch out for that then. And I assume from what you've just said, then your separate universal savers accounts are going to be focused on the specific chain. You're not going to worry too much about having to have interoperability between the separate universal savers accounts, right? You're going to have an algo saver, probably ADA saver and dot saver. They're not going to be mixed together. There's not going to be a joint pool.
Yeah, like so our underlying technology, like we do have like an interoperability standard for sure. But yeah, right now there's for a saver dollar. So this is the stable fixed rate savings account that a user is purchasing. Yes, there's a standard for each collateral source that we implement for sure. Correct.
Great. So in terms of you mentioned also that you were going to bring out some announcement in the next few months, but more broadly, what's Blockswap's roadmap going to look like in the next few years to maybe understand a little bit more how you're going to evolve on top of already supporting different POS blockchains?
Yeah, so I mean, our North Star is we want to bring 1 million accounts into Blockswap Network. So we want 1 million users to have access to this sustainable savings account and build more fixed rate products utilizing proof of stake as a mechanism. That's really where we're focused. So yeah, in the coming years, I think right now we're focused on integrating with those 4 chains. But of course, we will be broadening that scope in the future as well. And I think like the core focus in the short term is really we have taken an approach where we're rolling out our beta products through a protocol market fit exercise. And what this is we call it the Stakehouse game, which is essentially simulating the ETH2 coordination layer that I mentioned before, but in like a safe and simulated environment. So we have an approach where we're basically distributing a large amount of incentive rewards for users to participate in this beta product over the next coming months, and they can essentially interact with that stakehouse. And what we've done is we've essentially gamified the experience. So again, how do you onboard users in the most efficient manner, intuitive manner, and reward them for interacting and learning about the protocol? So when we go to mainnet in the coming months, they're already attuned to how to interact with it. So this Stakehouse game is pretty interesting, where there's essentially like a leaderboard of to start with a maximum of 10 stakehouses. As you mentioned, a couple of those like Polygon. We have like Republic Crypto, StakeNode, a big DeFi community in China called Venmo, and a few others. And what happens is basically these stakehouses are competing for the yield rewards. So if you're the top stakehouse, you're essentially getting the majority of the staking rewards, and the users are getting the highest amount of staking rewards for being in that specific stakehouse. And then we have a bunch of like mechanisms to stop like manipulation of the game and things. So I think we've really taken an approach from the start of we want to put a product out there and get user feedback, iterate off that, and then keep developing from there. Because if we're doing this in like a safe environment where users don't really need to be concerned about losing like their ETH and things like that, it enables us to one, stress test the protocol, and the other side, users are being rewarded considerably for interacting with it as well. So yeah.
No, that's really interesting. So I mean, if this isn't too early for you guys, but I imagine you already have some beta users. What's your user growth adoption looking like? Just to understand, how close this North Star could be in a few years' time.
Yeah, I mean, we're definitely not at 1 million users yet, but we're definitely going towards. We're approaching like mainnet. The Steakhouse game has been a really interesting exercise so far, and just to be clear, we haven't even launched it yet. It launches in the next couple of weeks. So what this will do is you basically have like 3 stakeholders. So one is a node operator. So this is like a Polygon running the Steakhouse. This is like a Republic Labs running a Steakhouse. The second one, you have a user. So this is a user that's holding the token that we've issued for this game called CBSN, which stands for CommunityNet Blockswap Network. And all the tokens that are earned through the Steakhouse game are actually redeemable 1-for-1 with our mainnet token when we go live. So these are real tokens that people are earning, but it's not in like a risky environment. It's all run in like a simulated environment on Rinkeby. So again, limited gas costs and things for interacting. And the third type of user is called a batch minter. And a batch minter is basically, they have 2 types of rewards. One, staking. So they stake a minimum amount of CBSN and they get a fixed rate reward. This is actually going to be around like 1,800% maximum. So it's quite considerable. Then they have a second reward, which is the game reward. And the game reward is they are receiving a reward based on the number of users that they invite. So for one, they have another token called SHB. I'm not going to get into that, but basically that user can invite 4 other users per SHB, and the volume of users that they invite, they essentially earn more rewards, and all of the users that they invite also earn more rewards. So what we've seen is like kind of like this network effect where one, we've taken the approach of interacting with established and respectable external communities like Polygon, like Republic, StakeNode, etc. And that's actually led us to grow our ecosystem and community very fast. So I think we're over like over 30,000 on Telegram now. Like our Twitter's over 50,000 followers, where we've essentially subsidized the cost of users coming into the Steakhouse game. And yeah, it's very interesting. So we have now over 30,000 users registered to join the Steakhouse game, and we have now over like several thousand SHB that's been minted through Gnosis auction that's running now. Yeah.
Oh, brilliant! Glad to see you're also using Gnosis after it's been a few years since they were sort of looking forward to get full adoption.
Yeah, Gnosis auction is awesome. Like they've just launched a new product in the past like month. It's essentially an auction platform. So it's a really interesting way to another interesting way to distribute a token. So initially we did balance the LBP, so liquidity bootstrapping pool, as this was like, we saw it as like the fairest way to issue a token to as many users as possible. Because they have this like price elasticity curve. And essentially I think that's really where we're trying to like aim in all of the things that we do. How do we enable as many users to get access to our protocol in the most easy, intuitive, and cost-effective manner? So we're trying to utilize all of the DeFi tools available to us to enable that. So how do you stop front running? How do you stop bots? All these things that we can try and put game theory within to try and give users access to this at the first possible way.
No, it's great. And it's great to see how you guys are essentially integrating all the innovations that are already happening in the DeFi space to augment your great product anyway. But thanks for all that, Scott. It's been great to have you. And looking forward to see Blockswap really emerge as one of the primary fixed income products in the very near future in the market.
Thanks for having me. It's great to talk.
Thanks.